All right, good Monday, everyone. My name is Manny Rodriguez, and welcome to another edition of Mondays with Manny. This is a live cast discussing common problems organizations face and how to deal with them using the science of behavior, as well as all matters of business science. Special thanks to our sponsor, Business Science Magazine, 305 Publishing, the OBM Alliance, and of course, my teammates at Bueno Ventures. I am very fortunate to have a friend of mine and a colleague and also a fellow doctoral candidate from the University of South Florida, Mr. Christian Koch. Christian, thanks for joining us.
Sure, Manny. How are you this morning?
I'm doing fine, buddy.
Good
Thank
to
you
see
very
you.
much. Yeah, absolutely. I'm going to do a quick little introduction to you, Christian, but I'm not going to do it justice. So I'll let you kind of do your 60-second elevator speech, if you will, of who you are and what do you do in the world. But I wanted to do a quick introduction from my standpoint. Christian, based in Atlanta, financial advisor, financial guru, if you will, published, author of several books, including one that I'll flash over here in a second. Actually, I have it right here in my bookshelf. I do these kind of things all the time. This is called The Big Question with Christian Koch and Larry King and all sorts of other entrepreneurs. Great book. I highly recommend it. And Christian has done a fair bit of advising and guidance for me, so I really am so happy he joined me today. And I thought this was really important topic around finance, financial world, the financial state of the world, and really how to bring about a scientific way to our financial health, right, and our financial wealth. So I thought of nobody else but Christian to come join me for Mondays with Manny. So without further ado, Christian, would you mind giving us the elevator pitch, a little bit about yourself, your background, etc.?
Sure, Manny. I guess the last 5 weeks I've been in the house taking walks with my wife every day, and life has changed. But in a normal world, I guess I'm a practitioner scholar like yourself. I'm about to defend my dissertation actually next month in about 3 weeks. My day job is I'm the CEO of a $80 million investment management firm. We invest in individual companies that are publicly traded. It's been a real difficult time the last 60, 90 days, as you can imagine. The market's declined. People are extremely fearful about next steps, what may happen. And my job is really just to give them wise counsel and guide them and help with their emotional stability. I mean, I've witnessed the last 90 days just a range of people's just discussions of what people are concerned about, and we can talk about that today. But yeah, life is a little different than kind of the normal, and it's also a very attractive time to start investing because prices are down. And if you take a longer 10-year horizon, my dissertation work, as you know, is on Warren Buffett. And so when he looks to buy a company, he's not looking at what the company's going to do in the next year. He's thinking, okay, in the next 10 years, what will be the demand for See's candy or the demand for Coca-Cola? So he has a much longer term framework, and I'm just trying to apply those scientific principles to investing today. So that's my 30-second elevator pitch.
That was great. That's great.
Daily walking, trying to get out of the house with 5 children going to school online.
Crazy.
In each of their rooms to managing a practice and talking to clients and doing Zoom meetings. I'm a professional on Zoom meetings now.
Hey, this is great. And I'm a big fan of the online virtual world. I've been working from home for a long time, but there's something different about today's society when more and more people are online. And I don't know about you, but my internet was actually crashing last week because so many people are working from home in my own neighborhood. It's out of control. But anyways, I won't go there. You mentioned
that's a whole other thing. If the internet stops, life stops. Like my kids come down and it's like something happened.
It's true. It's really weird. It's really weird. So there's a couple of things I definitely want to ask you about, but you were sharing with me some slides that you had put together that I thought would be
Yeah,
really interesting to share with the audience live. It's kind of a state of the nation kind of look.
sure.
It's an outlook. So go ahead and share those,
Okay.
and then I'll ask you a few questions on some of the things you mentioned.
You bet. And these are, this is a slide presentation from a Harvard Business School professor that I had at HBS in 2004. And we had a Zoom call last week, and he had some interesting slides. So I thought I'd share those with you guys, or some of them with them today. So the first one is the unemployment rate. Is it up? Can you see it okay, Manny? Okay, great.
Yes, I can.
So before we went into kind of the pandemic, I gave a live presentation in January to about 50 people during lunch, and the unemployment rate was about 3.5%. It was the lowest level it's been in like 30 or 40 years. And now you can see that sharp spike in March here. And that spike is about 4.4% now. And people are estimating or forecasting that the unemployment rate could be double digits pretty quickly in the next couple months. So a low unemployment rate means that the economy is humming and things are going very well, which was what was happening in January. And now you can see there's a lot of people without jobs, and that number is likely to spike much further. So I thought that was a good illustration, if you will. Let me get to the next slide. So bear with me on technology, Manny.
Yeah, you're doing great, buddy. You're doing fine.
Oops.
And while you're transitioning, for those in the audience, remember that our last bit on Mondays with Manny, we do a live Q&A with myself and our guests. So that won't be in part of the recording, but I just want to splash that in there. And for those who are watching the recording, I will go ahead and highlight Christian's organization, Cam South, his website, a link to his website and information more about Cam South.
Okay. So the next slide is oil prices. And I think that people kind of misunderstand this. So oil prices have declined, but the positive out of declining oil prices is it really helps the consumer. So people are worried about inflation and inflationary pressures longer term, which is true. But in the short term, lower oil prices really helps the consumer, and it's a deflationary factor, not an inflationary factor. And in fact, today, as we talk today, it's the 20th. WTI for the next month is close to like $11 a barrel. So it's actually fallen even more, and that's really actually new today. And I we're at a 20-year, 30-year low here. I remember I was an energy analyst in, let's see, 1980, 1996, 97 time frame. I used to follow Exxon and Chevron, and the price of oil was around $10 or $12 a barrel. So, demand is lower and supply is much higher given the current pandemic, but countries and energy and oil demand is not going away for the longer term. So I think people are potentially too negative on this, but short term it's falling.
Mm-hmm.
And then kind of the last slide I want to show everybody on the left hand side is it's retail sales. And you can see that has kind of dropped off the cliff. And the reason I think retail sales is important is because 68% of the economy is consumer. So if you look at this red, if you take 0.29 times 0.68, which is the percentage of GDP, it looks like GDP will be down for the month or for the quarter about 20%. And that's pretty big, Manny. I mean, that's a pretty big
That's
hit.
huge.
So
Yep.
the consumer has basically come to a screeching halt. And then I guess one other final slide is this is the U.S. economy, and these are kind of U.S. macroeconomic forecasts for 2020 for GDP. And you can see here people are forecasting for the year. It's not for Q2 or Q3, but a decline of 6.4%. And so from a magnitude standpoint, that's pretty large. Um, so that's the bad news. The good news is, I think there's, lots of interesting opportunities. I think if you have some emotional discipline and self-discipline, that this is a great time to invest. And I think you just have to take a more longer term point of view, like Warren Buffett does, to be successful.
So Christian, I appreciate the data. So first of all, for everyone that's watching this recording, as well as the ones in the live audience, never choose a financial advisor that doesn't show you data first. So what Christian just demonstrated was great use of science and rigor into looking at the market and looking at the world and the situation. And I can tell you, first time I ever sat with Christian, he talked to me about the state of the stock market at the time. And that was 2 years ago when we were talking about my financial advising guidance needs. But so I really wanted to say thank you for that. You presented some great data, and I wanted to kind of hone in on a couple of things for today's Mondays with Manny. So, so you just approached this situation, this Mondays with Manny, with showing us some data. You talked about a process, a scientific process to how you guide your clients, and you also talked about that the people are fearful today. People are fearful today, and this notion of really becoming more emotionally disciplined and self-disciplined. And I want to hone in on that. How do you guide people to being emotionally disciplined and self-disciplined given today's situation?
Yeah, I mean, I've been reading a book the last couple weeks, and I'll show it to everybody. I don't know if you can see that, Manny. It's called Tough Times Never Last, but Tough People Do. Okay. And, I consider myself one of those tough people. I hope you would consider yourself one of those tough people.
I try.
But the theme of the book is very interesting in that, attitude and negative thinking are extremely, negative thinking is very toxic, is my point. And so, it can be very, your thinking can be infected just like the pandemic. And so I feel like it's very important to have a framework when you invest. It's very important to be disciplined when you invest. Yes, things happen and you have to adjust. But I think some of the negative thinking and your attitude towards things really, affects your mind, and I think really social media too. I mean, this cycle, for the first time, everybody has an iPhone, and you get hourly, minute by minute updates on the market's down 500, the market's up 500, the market's down 1,000, and so I think that gets into the psyche. And so you asked me what recommendations I'm telling clients. Well, first of all, what I said was, don't look at your statements in March, because you don't want to react or overreact to you own the same amount of shares, the same amount of stocks. Yes, it's down, but you don't want to, react and change what we've put in place. So that was kind of the first thing. But I do think people are affected by the emotional roller coaster of daily news. And I think it can take over your mind at some level. And so, I just kind of want to share that concept. It's more abstract and less rigorous, if you will. But I've just seen it over some discussions that we've had. So, what I'm saying is the biggest problem we all may face, being in the house for 6 weeks now, is just negative thinking, like extrapolating the economy is going to go down for, forever until the next 2 years or something. And I think it's always kind of darkest before the dawn, and people get way too negative at the end. And that's what, at least I'm trying to frame how to invest going forward.
Well, I think that's super interesting, and I completely agree. I mean, I think negative thinking leads to negative behavior, leads to poor choices, poor decision making, right? And so I think
it snowballs.
Absolutely. Absolutely. And one of the things that's also interesting is you mentioned the data that's in our face every day, right? Which is like almost counterintuitive to how we would coach an executive on how to make decisions with with the use of data, but the problem is too much data could be problematic too. And I
Okay,
think
so
that's absolutely.
let me touch on that point, Manny. So if you look at any Fed data or how you track the economy, historically, it's usually quarterly data. Okay. Now we're looking at daily data. Okay.
Yeah,
So
almost hourly. Yeah.
the time series has compacted and everybody's extrapolating these negative things. So I was a tech analyst during the bubble, and all the data, it was the opposite. We had, everything was up to the right. So we had, data that was, it wasn't down like we are today, but up. So what we did is we normalized the data for those patterns. So one of the questions I asked my Harvard Business School professor was, yes, retail sales are down huge for the month and they'll be down huge next month, but how are we normalizing this stuff? I don't think it's helpful to look at monthly data and then make that a trend. I'll give you an example. I remember and it's in one of my books, Manny. I remember the first time I flew into San Francisco. It was a clear day. You could see the Golden Gate Bridge. You could see Alcatraz. I mean, it was just, it's pretty. 2 days later, I flew out in the morning. It was cloudy. You couldn't see anything. That doesn't mean it wasn't there. Doesn't mean the Golden Gate Bridge left. It just, you couldn't see it. And so I feel like we're in this period now where the economists and all the data we're getting, yes, it's bad. It's very negative, but you shouldn't extrapolate all the way down to the bottom. And I feel like there's a school of thought that's doing that right now. I don't have the answers, but at least I'm taking a much longer perspective.
Yeah. So that's an interesting, one of the tagline of your company I really like is "We build wealth," and I know there's some history behind that. I know there's but it really is at the end of the day honing in on what we're all kind of trying to do from a financial health and well-being, which is have some financial wealth. But wealth could be different for different people, right? But I really like that concept. So given where we are today with the amount of data we have, you talked about self-discipline. So what are some of your tips around kind of developing some good self-discipline practices for your clients, for the audience here?
Well, for how we look at businesses or how we, start to invest in business, we have a whole process that we go through. So when we're investing, we're not investing in pieces of paper that go up and down. We're investing in a business that's publicly traded. So we're looking at, okay, what is the business that we're investing in? What are the economics? What are the margins? What are the moats around the business, if you will? What is their sustainable competitive advantage? Does the management team own stock, alongside us, if you will? And then finally, the last component, which I think a lot of people get wrong, is what price are you paying? So there's difference between a good company and a good stock. So we'd all say that Amazon's a great company, but and actually Amazon has been a good stock, but the valuation is very stretched. I guess maybe I should use like, another example like Netflix or something. So what we try to do is pay a price that's reasonable. We don't try to overpay for that business. So it's very disciplined in terms of, the hoops we go through. But in times like this, we have a shopping list, and usually the first two criteria, is it a good business? What are the economics, are fulfilled, but then we can never get the price right. It's just too expensive. Now everything's come to us. So our shopping list has grown in the last, 30, 60 days. And so there's these tons of great businesses that now, because of the pandemic, have been on sale. It's like a fire sale. And, and we've been proactive in starting to purchase shares. So that's the discipline or the structure we have. The last part of that component, there's 4 elements, is we look at insider purchases. So it's not insider trading, but there's public information that comes out daily if the CEO, CFO, board of directors buy stock in the open market with their own money. And to me, that's a signaling factor that says they may know, or they may see something in the next 2 or 3 years that they're positioned. They may see a big order coming or something, that they're putting their own hard-earned money to work with us. So those are the four factors, or those are the kind of the scientific approach that we use. We've been pretty successful over the last 10 years. Like I said, last quarter was horrible, but it was horrible for everybody. I mean, if you owned
for everyone.
Yeah. I mean, if you were completely diversified, you were still down fairly large. So I think that's more of an aberration as well.
Yeah. Now, Christian, man, great tips. I hope I'm sure everybody's rigorously writing notes. I'll be flashing them on the screen in the edited version of this recording, so people will see it right under your face there. But all right, so I want to kind of take a quick little turn, and then and I think this would be a good way to kind of conclude today's Mondays with Manny. I'll flash your website for everybody that's interested in learning more about you and Camp South and your books. But so a piece of advice that you gave me a couple of years ago really helped me out, which was kind of that the school of hard knocks, like, maybe you're not really ready to invest. And I think that's really important today, especially when there's so many Americans, as you saw the data, right? So many Americans are unemployed. So many people are kind of penny pinching, make sure that they have enough in savings, liquid savings, etc. So I'm kind of curious about like your kind of send off advice, or anything you really want to say. But that advice that you gave me was kind of a good reality check. Like, I was doing pretty good, but there was some tough times for me a couple years ago. And Christian was like, yeah, maybe it's not time for you to invest right now. And I said, yeah, you're probably right. And that took a little bit of a reality check for me. And I was able to secure a lot of liquid savings, and I'm in a different place now. So it's good. So I was curious, like, the people that are either unemployed or, scraping a little bit or saving a little bit, when is the right time to invest from a individual financial health standpoint, so that they can become happily wealthy, etc.
Sure. It's a good question, Manny, and it's person specific, client specific. But I think in this time period now, during the pandemic, I think it's important to have some holding power. There's some power by just holding on, not giving up. And so my message here is, you don't have to do anything right now. Just hold what you have. Don't trade a lot. Don't move into another strategy. I mean, I think most in the last financial crisis, 2008, 2009, and this is not comparable, but the people who just hold steady, recovered, everything and more, whereas the people who went to cash and were fearful did not recover at all. And so I think there's something to say between, for the holding power, just holding on now. That may not apply if you're just starting to invest and starting a strategy like you had just asked. But I think, what I'm telling clients is, and I'm seeing the range. I'm seeing clients that I had some clients leave. They called me and said, I want to go to cash, Christian. And 2 days later they left. And it has nothing to do with me. It's just kind of they're back to emotional stability and self-discipline. But I also had the other extreme where I had clients wiring me money. This is a great opportunity. Prices are down. Let's go. So, my message is, hold steady. Don't look at your account every month. Focus more on the, 5-year period. So I'll give you a good example, Manny. Any basic finance 101 class, and we all talk about the numerator and the denominator on COVID-19. Well, the numerator in finance is the cash flows from the business. Okay. The denominator is the discount rate or the interest rate. Well, we don't know either of those right now. The cash flows are down, and the interest rate, the Fed put the 10-year treasury near zero. So again, you have to look at what the business will look at in 5 or 10 years, not what the business is going to look like next quarter or the next 2 quarters. And that's our approach to that.
Great answer. Holding power. I love it. I think that could probably be another book for you. That title, Holding Power. I think that's
Well,
self-discipline,
I would
emotion.
strongly recommend this book for all your listeners.
Okay.
I found it extremely helpful. Bob Schuller, he in the first chapter, he talks about they grew up in the farm belt in Iowa, and he talks about a tornado that completely wiped out his home where he grew up, and they really had to start from scratch. And so, his message is tough times never last, but tough people do.
Yeah, well, I'm going to buy the book myself, and I just flashed the Amazon link right there in the chat room, and I'll splash it on the screen for those that are watching the recording. So because I'm using the free Zoom account, we got about 8 minutes left, and
Okay.
I wanted to go ahead and let you have like a final 60-second sound off of whatever you want to say to the audience. But I truly appreciate your time today. So any last parting words for our audience before we sign off and we do a little Q&A?
Yeah, I appreciate the time this morning, Manny, and I would just say, continue to get out of the house, continue to take your walk, take your mind off kind of current events, and don't focus more on the longer term. I mean, I don't look at the market every day. I'm focusing more on businesses and what their projected outcomes are. So I try to unplug myself from the noise that we're hearing daily, and I think that's very constructive. I would encourage everybody to do that. I don't have all the answers though, and as you know, I'm a pretty down to earth person, so I put my pants on just the way you do.
And you're spoken like a true scientist. I don't have all the answers, but here's what the data tells me, and here's my advice. I love it. So, Mondays with Manny. This is Christian Koch of Cam South. Thank you so much, Christian. We're gonna go ahead and sign off
All
this
right, my
Mondays
pleasure.
with Manny. Hang tight for a minute for our live Q&A with the audience here. But thank you for watching, folks.
All right, see you, Manny.